Today I will tell you about the strategy of one of the channel members who has closed his account with a profit every month over the past 14 months. This strategy is so attractive, and at the same time, this person's capital management method has helped ensure consistent profitability. We recommend not missing out on this strategy because it truly helps improve your profitability mindset. This strategy can be excellent for all markets, including gold, Forex, crypto, and even stocks. So stay with me until the end of this video. Before we dive into this exciting strategy, I want to extend a special thanks to all the friends who have been with me during this time. The number of channel members has reached 3,000, and each of your presences is truly valuable to me. My recommendation is to definitely visit the channel and review the various strategies. Because we can really help enhance your profitability, these strategies are available for every trading style you have. There is a strategy in the channel, and you can use any of them to increase your profitability. Before we move on to this strategy, let me explain that we had some very attractive trades in the prop account we took, which we will discuss at the end of this post. So be sure to stay with me until the end of this post. Alright, let's move on to this strategy and see how this person managed to close their account with a profit every month over the past 14 months. The first thing our friend did was use an EMA to determine the overall trend. Now let's go to the settings section. I'll highlight it here so it can be seen better. Set the EMA and the length to 200, then click OK. And it has been able to identify the overall trend this way. For example, when we are below the EMA 200 or this yellow line we have, they only take short positions, and above the EMA 200, they only take buy positions. Another thing these individuals have done is to add a MACD to the chart. When we add the MACD to the chart, we go to the style and remove the MACD line and the signal itself. We don't make any changes to the MACD settings. Well, what this person did is not to convert the candles from candlestick to line chart. They made them linear. This has a very interesting point. The way they take positions is like this. When we have a trend like this, perhaps, we have an upward leg, a downward leg. And when we are passing through this resistance here, they come back to look for a position. But they don't accept just any position. If we want to label this as leg 1, this as leg 2, and this as leg 3, when we pass through here, we need to confirm our own validations. What do the validations look like? Now let's go over the complete chart and examine all of this. If we want to analyze from the beginning of this movement we had here, you will notice that we had an upward leg here and experienced a downward leg here. Now, we could also consider this as an upward leg, a downward leg, and an upward movement. But we are looking for movement. We are looking for movements that have a 130 ratio in the MACD. Let me enlarge it. If we look here, throughout the entire time we were in an upward trend, and even here where we had a nearly downward leg, the MACD has always been upward. But if we want to analyze here, for example, if we want to examine this part, you can see that we experienced a nearly downward leg in the MACD. So, he has arrived at this point to compare this with our second type of leg. Essentially speaking, so when we come here and break above this previous level, we take a long position. Well, we take a long position here. Indeed, we buy and then place our stop loss just slightly below the existing swing low, aiming for an optimal risk-reward ratio of 1 to 2. Well, as you can clearly see here, the specific position we took could have potentially been closed with a significant profit. Now, what our friend actually did after taking the position was exactly like this. When our first take profit was hit, for example, right here, they carefully turned the candles into a trailing stop. So right here, they converted the candles into Heiken Ashi after our type 1 was hit, which is exactly here. and then they used Heikin Ashi itself to perform the trailing. When should the position be closed? When we have a doji candle. I've talked a lot about Heikin Ashi candles before. Let me remove this. I've talked a lot about Heikin Ashi candles before. This candle is a decision candle. And we can almost say that here we can consider this as a bearish candle, even though it has formed. And this is where we are experiencing an exact bearish candle. So if we come and place the stop loss for the position we had taken, I think it was this candle. I believe we could have maintained the position up to this point. That means we could have taken approximately 16 pips from this position. Notice that what our friend has done here has greatly helped in ensuring that the pips they are taking are very precise. They themselves say that the average pips they are taking are around 4 to 5. And the win rate of this strategy is around 50%. And if we take a look at their profitability, let's assume it is even 40%. And we set this to 5. With stop losses set at 1. And we conduct 10 trades. You can see that with 10 trades, we could have made nearly $24,000 profit on $100, which is a very attractive figure. Now, let's assume it remains at 50%. They said okay. They could have approximately $5,000 in profit with around 100 trades. So, up to this point, we have moved forward with the position we had. Now, let me clarify this further, so that the line chart doesn't get messed up. From here on, we need to convert our chart back to a line chart. Up to where was it? Up to here. Okay, here we are again in the same position. As we proceed with caution and precision to avoid confusion and maintain accuracy. The histogram we have has given an entry signal. Why? Because we had an upward leg, a downward leg, and then it broke above that resistance. If we want to set our stop loss here, we should look for an arbora pattern. Look for 1 to 2. As you can see, we were able to achieve about 1.5 here. Now, the task we are performing, as I mentioned to you, is that when our TP1 is hit, they would convert the chart to Heikin Ashi. Let's go back. And as you can see, this position is almost closed until we have this downward Heikin Ashi candle, which means almost with an arbora of 1 and 15. These positions are closed. Well, let me clarify here that when we switch to a line chart, it should be clear where we started from. We switch to the line chart again, and here, well, as you can see, there are very important points here. Our MACD is negative, meaning the histogram is below 0, so we are not looking for a position here at all. If we want to analyze this, it has made a low here, and we had an upward movement. This leg cannot really be considered an upward leg, so we are not looking for a position here, even though we entered this position. Certainly our take profit would have been hit if we analyze here as well. If we want to analyze the same leg, you can see there was an upward movement, then a downward movement that extended quite a bit, and then another upward movement. We could have considered this as an entry position for ourselves, especially considering placing it a bit higher. You see, we could have really had a very good arbitrage from this position. Notice the stop losses we have here. We know they are very small. This chart we have is a line chart, and there is a possibility of a downward movement hitting our bottom. But usually it happens that our upward movement continues. Now, let me also highlight this area. Let's analyze and as you can see here, with the upward movement that has started, it has almost not gone below the stop loss we set. This is the same upward leg we had in our line chart. So here, for example, when we enter, we can almost say that we were in the position until the peak that is here. Let's see what the situation looks like. Okay, we were here. If we look here, we didn't have the downward movement and the upward green histogram movement. Here, it's exactly the same situation. Here, You could say we've come below zero, so we won't take any specific position here either. Here, as we might understand, we take it. We had an upward movement, you could say an upward movement followed by a downward movement, and the upward movement can't really be considered a proper upward leg. So we're not looking for a position here either. This is a place where we can truly consider it an upward leg. We've experienced a downward movement followed by an upward movement, and so we consider this as a long position. We are looking for a 2-bar pattern up there. If we even want to definitely turn this into a candlestick, you can see that from the point we entered. The upward trend movement has started. So we turn this into a Heikin Ashi, and as long as we don't see a bearish candle, we stay in our position. This means that even if we want to consider this area, we can easily get a 6, 6 or 6.5 bar from this position. As I mentioned to you, this method has some nuances that can really help us due to the nuances it has. Increase our profitability and be able to capture very large profits in the market. I emphasize again, when you convert your chart to a line chart, there is a possibility of a bearish move. But in the line chart we currently have, because the upward movement has started, we do not experience that downward move. That's why I have now taken 3 to 4 positions here. We reviewed them and all must be closed. The possibility that our stop loss might be hit in 1 or 2 of these positions really exists. But after the upward movement starts, the win rates that this strategy gives us are very attractive win rates that can really lead us to very large profits, even with a win rate of 30%. Let's move on to the challenge prop we took and see what the situation should be like. As you can see, our profit has reached approximately $205. I think the last time we checked, it was $100 or $120. Well, if we look at the history, let me set this to all to observe these records. I'll also enlarge this a bit for clarity. Almost from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, and 19, 17, 18, up to 18 trades that we recently made. Only one closed at a loss. This means 18 out of 18, and the win rate we currently have is 94%. Last time, I mentioned to you that I'm not aiming for an extremely high win rate. A normal win rate can really get our work done. Take a look at the overview itself as well. The important point for me is that the maximum drawdown we had was 0.434%, which means it was below 0.5%, and we were able to achieve nearly a 2% profit, which is a very suitable figure. Now, if we want to look at the positions, you can see that approximately 67% of the total positions we took were profitable, based on the strategies we provided to you in the channel. I should also mention that the strategy I am currently using, which has been mentioned in the channel, has undergone some changes that I will soon share with you. All the strategies you see are based on indicators. Neither ICT nor price action is involved. I am trading solely based on indicators, and these trades have been 94% profitable, yielding good profits. The drawdown is very suitable. Another important point is that our recovery factor is 3.5 and the profit factor is 1.8, which are good numbers. The Sharpe ratio is also 0.16, which is a really good number. So please share your thoughts on the strategy I mentioned earlier. And also let me know about the prop challenge. Do you think I should share this strategy with you or not?